It's great to have you. Let's just get started by helping our audience understand the scope of US-China economic ties. Can you explain a bit about the level of trade between the US and China, the number of US companies with business ties to China, and how these economic ties have grown over the decades?
Well, US-China trade is enormous. Canada and Mexico, for obvious reasons, are our largest trading partners, but China comes in solidly as number three, and therefore our largest overseas trading partner by far beating the fourth largest trading partner. So total US-China trade is roughly on the order of $600 billion a year. And it's very imbalanced. And while the ratios go up and down, it's about 4-1 in China's favor. Now, last year, in 2020, US exports increased 18%. But that's after a 20% decline in 2019 and 2018. And so we're near the peak level, and we might surpass the 2017 peak in 2021, but that remains to be seen. Tariffs have impacted the trade between the United States and China in a pretty profound way. It's much more difficult for new to market or new to export entrepreneurial companies in the United States to address the China market as a result of the tariffs. But in the main, most American companies and most Chinese companies have, over the last year or so, been able to figure out workarounds. There's been investment in third countries. And so the trade, by and large, continues pretty much with having gone through that recalibration and that adjustment period caused by the tariffs. Investment remains very high as well. And when you look at investment numbers, they're a little bit, I would say, not uncertain, but not well-founded. And there's a lot of problems with investment numbers. Much of Chinese investment in the US is coming in through tax havens, such as Bermuda and other places. And so the numbers become difficult. However, I think it is fair to say that investment between China and the United States also remains very, very high. Hundreds of billions of dollars of US money having gone into China, and perhaps a quarter of that amount of Chinese money having come into the United States. So foreign direct investment is an important part of the relationship. Portfolio investment, that is investment in stocks and bonds, is even larger. And the Chinese have spent in excess of $1 trillion in American bonds and treasuries and other government-linked securities, as well as purchase large amounts of American stock. And American money in the portfolio investment area is moving rapidly to China as well, as Chinese interest rates are higher than US interest rates and global interest rates, thus attracting a flood of money. So the trade and investment relationship, while it has been challenged, remains very strong. And I would expect that that will continue in the months and years ahead.